All right, hey everybody, so let's get back into it. I have gone through my journal this year and pulled out one market with one particular trade. This trade had to be adapted a little bit along the way. I pulled out my notes from the journal when anything changed, and let's just kind of review this a little bit. This goes back to being very mechanical. Now, we can always trade based on unusual options activity or some news going on in the market, a catalyst event. We always have that. And one question that I get from people all the time is, how do I find something to trade? I'm here, I'm at the computer, I'm ready to go. I can't find a trade. They're using trade alert services and they're paying for all these scanners and they're actively hunting the market, and they always seem like they're behind, that they're never there fast enough. I never have that problem. I never have that problem. And one of the reasons that I don't have that problem is because I have very mechanical trade strategies. First of all, it's the very first thing that I go to every day. So, depending on what day of the week it is, I go to one of my strategies. This particular strategy is a Tuesday, Thursday trade. It's called the rolling strategy. It ended up being in spreads. It wasn't designed for that. But every Tuesday and every Thursday, I go put on a trade and SPY. That's it. I don't look at the chart. I don't care. It doesn't matter. The market is bullish. It's always bullish. The only time the market is not bullish is when there is pressure on the market from external forces. Bad news, virus event, something. If that external force is not there, the market goes up. You can bank on that. Let me show you how you can bank on that with this video. So a couple of things to keep in mind. I'm not focused on trying to teach one particular strategy here. What I'm trying to teach is that you can build a strategy very simple, very easy, very mechanical, based on some simple logic. My simple logic at the first of the year is that I was tired of the questions from people who say, I'm running a credit spread strategy, I'm winning 90% of the time, my account just really isn't growing anywhere. It seems like a zero sum game. I'm not getting ahead. Sure, I win a couple, then I lose. The loss is way too big. It wipes out my winners. I'm just not getting anywhere. I'm winning frequently, but I'm not making any money. Man, guys, I know how that feels. Trust me, I've been there. I know how that feels. So at the first of the year, because of the work that I've been doing in futures and focusing on aggressive account growth, at the first of this year, I decided that I would use the same logic in options. I don't normally trade this way. What I would normally do is aim for something with a high statistical probability, and I would tuck it a little way out of the money, not too deep. I'm not talking about like a 10 delta, but I would be in the 30s or the 25s, maybe the 35s, and I would just put on the trades, and they would do okay, and I had some Friday expiration iron condors and things like that, and those would do okay. But man, the money just wasn't there. So I'm tying up all my capital. I've got all these spreads going on, and I'm using the trade small, trade often logic, and just isn't really getting anywhere. I left my day job and came home to trade because I was able to put on enough trades and win enough money that I could make more money doing this than being at work. That was in late 2018. Now, through 2019, uh, a lot of things changed, and we had the futures really started getting big, and I shifted my focus on what I was trading. And sure, I still dabbled in options, but since the money just wasn't there, I could work so much less by trading futures and make so much more that I focused on that. But options are what people gravitate to. They think, oh, this is easier than that future stuff. That future stuff is so hard. I'm going to go do options. And then they come over here and they try to run a mechanical trade strategy, and there's just no money in it. But I wanted to prove that there is money in it. You got to use an aggressive scale, right? I don't care about winning 95% of the time. Not if at the end of the day I'm winning a $10 trade and $15 trades or $30 trades, and that I've got to have over 100 of them going at any one time to be able to generate any real money. Now, trust me, if you've got, $750,000, you've got a real big portfolio, and you don't need to close a trade to open a new one, and you can just stack them up, hey, go for that. Go for that, right? That's the real trade, small trade often kind of account right there. But, if you're sitting on an account where you got to manage trades, close something to open them, if you, maybe have 10 or $15,000 and you're trying to do something with that, put it to work, guys. So let's start going through here. First, let's go over to the rules. I've babbled long enough. The rules in the beginning of the year. And we're just going to zoom right in on this for a little bit. So on December 20th, I started to develop the trade strategy. I decided to use a strategy that I've been building in options. The rules are listed below. I'm buying at the money, better than a 12 day to expiration or as close as possible trades. I'm buying calls. That's it. Just buying calls. I need to stay below $5. So if I can get, 4 or 5 of them, that was the plan at the time. Great. The profit factor was get closed before 75% because I would be fading out of these, was the plan. If I'm losing, close at 2/3 of loss or within 3 days to expiration. Believe it or not, those kind of go hand in hand. We'll get to that later on. So since I'm buying calls, the amount of money that I can lose in the trade is how much I paid for the trade. Okay? If I bought a call for 94 cents, I can't lose more than 94 cents. The target for this strategy is SPY, QQQ, IWM, any of the XLs, so XLF, XLY, XLE, XLI, so any of the XLs, the emerging markets, and semiconductor ETFs. In this particular book, I've only got SPY at the moment because I had to go in, guys, and open up my trade journal and pull out of all of the trades on there, just this strategy. It's a lot of work. It took me days just to get SPY in here. So I haven't done the other ones, and I didn't get a trade in every single one of these products in every single week. SPY I did. There's a few I'm going to go through it where I didn't get a trade on, but most of the time I did. All right. The trade is performed every Tuesday and every Thursday. Okay, it's at my discretion if it's in the morning, in the afternoons, at lunchtime. Honestly, guys, lunchtime is the best spot. I can't stress that enough. I went back to the basics on that. When I was working a day job at lunch is when I did 90% of all my trading. It is a better opportunity to trade at lunch. So this is Tuesdays and Thursdays. And the reason it's called a rolling strategy is it kind of goes back to the way moving averages used to be called a rolling average. That you would take the existing formula or the existing number and you would just roll it over onto a new sheet of paper and continue to do the math. All right. That name and that convention it stuck with me when I was learning moving averages, how they used to do things in the old days. And the idea that I could be very mechanical and just every week or every day or twice a week, I could go in and just go at the money, just rolling it every 2 days or whatever, like a roll. I'm just rolling over to a new one and a new one and a new one. So this is not called rolling because I actually managed a trade and rolled them forward or saved a loser or any kind of stuff like that. It's just named off of the way moving averages used to be calculated by people who had to still draw their charts on paper. I know for you young kids that might be madness, but imagine having to do that. And then you'll understand why there are bar charts instead of candle charts or line charts. So along the way, I had to adjust things, right? February came along and I couldn't afford the calls anymore. I had to keep the trade under $5. Guys, those options went nuts, right? It's still nuts. So I couldn't afford it. I still wanted to keep the strategy going. So I swapped from just buying calls to trading put spreads. And then we started to come out of that low, that V-shaped recovery, right, that they talked about back in March. The market was getting it. So it was time. It was time to start trying to get those calls back in there. Uh, the problem is, though, I still couldn't afford them. So I started running uh, a different kind of trade. I was financing those calls with my credit spreads. It's getting a better cost basis for the calls. When I didn't trade, I marked the notes of it, and you can see I missed 2 different days in March. Guys, life happens. You know what I mean? We try to say that, with the mobile technology and the way things are nowadays, that we could trade from anywhere, and these are mechanical. I should have been able to do it. Guys, life, right? Life got in the way. I didn't get them done. All right, so um, there's been times where the losses came back to back to back to back. And at that time, I've reevaluated the situation and I cut back. I dialed back the aggression level of this strategy. And then, the market strong rally, and that's where I swapped over to financing those calls. I get a little cautious or a little nervous when I'm using the same strikes multiple days in a row. It's kind of indicating the market stalled. Uh, or if the pricing is the same, I get a little nervous. So I kind of, I just transferred my notes over. I was getting really cautious late May. Uh, the pricing started to come down, I'm late July, and it was looking like we might be able to just go right back to just straight calls again. Uh, I got real aggressive with the credit spreads because I was closing these things down with no risk whatsoever. I mean, the market had ran so far away that it would be almost impossible, like a four sigma move for it to come back and hit my trade. And I got to think, what am I closing these things down for? If I'm not opening a new one when I close one, then I don't need the capital. And if I don't need the capital, why am I bailing out of something that has a minuscule chance of losing? So I increased the targets. Here at the end of August and into September, multiple losses in a row. And I'm thinking of putting the call strategy back on hold again. I actually did, but in my notes, I had thought about putting the call strategy back on hold, dialing back in the aggression level. All right. So I think there's still some notes somewhere in my journal that I can add to this. Uh, I should have done a better job with my journal so that I could use like table format, and I'm not an Excel person, guys. So if I could have done it better, uh, I could have made this a whole lot easier. Okay, so instead I had to transfer it over into this new document. Let's go look at some trades. If it's in red, I bought it. If it's in green, I sold it. So I bought to open, I sold to open. Okay, that's what these are for when they're red or green. So when it's under price, that's why they're a different color. On the profitable side, if it's green, I was profitable, and if it's red, I was not profitable. Profit loss graph, what my target was in the trade, these are all calls. So this time I was just buying at the money calls, at the money calls, at the money calls. Before I scroll away from the top, so far right now I have 2 active live trades. Their numbers are not here. Otherwise it'd be a total of 149. I have 115 winners, 32 losers. That's a total of 147 trades completed. I have a 78% win rate. That's an actual real live number with this market and this strategy. Real money. let's start rolling down here. So the pricing on the options really started to dial up. I went to spreads. I was running $3 wide, and I was making it okay. $1.88. Uh, this one lost. This one lost. This one, and these losses they added up. I was running house's money. Off the first win, boom, right out of the bat, I was winning, and was on house's money. Took a couple lumps, started to bring it back up again, and then, guys, it was back to back. That was right into February. Just boom, loss, 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 loss. And I started to actually dig into my own account. So after that first win, I was on house's money, kept building the house's money, lost all of that, dug into my own account all the way up to almost $50. That's as deep as I ever got right there. We started to come out of that, and it's been game on from there. Now look at the value of these trades when I was running spreads. All right. I couldn't get a good pricing through these days. I tried. I could not get a fair price. There was no way I was going to put on a $3 call and not get at least 1/3 the value. There was no way I was going to do that. So I just didn't get a trade. All right. Didn't get a trade. Finally started to get some good pricing. Now watch these numbers really start to climb when we get to the aggressive trades. So this isn't aggressive. Now I'm straddling the money. These are not out of the money. I'm not using a far out delta. I am one option in, one option out of the money. Okay. Slowly starting to build this account back up. Look at how many trades this is taking compared to at the very beginning when I was just trading calls. Winning a lot. The wins are there. Win, 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 win. But yeah, when's the money coming? Right? When's that going to get there? So started to get a little more aggressive. I picked the speed up $5. Still running 2 trades a week. Back to back, back to back, back to back. And I decided to bump the target up. Okay. So these are running along. They're doing pretty good. I'm missing a number. Oh, yeah. Lost on that one. It's over here. I was wondering, where did my number go? Yeah, that was a loser. So, time to scale up. And the scale up is coming. So, one of my notes, I changed the closing percent because of these losses. I was having back-to-back losses again. Changed my target profit and dialed it back to a 25 and a 34. All right. I know this is where it really slows down. Talk about aggressive. That's not aggressive. Okay. We started to win from that. Lowered the cost basis for the calls. The wins are coming in. They're really time to start picking up the pace. And I did. So this is showing that I have 2 trades on. I took that $2 credit and I bought a call with it. Instead of spending $6.51 for this call, I actually got the call for $2.02 cheaper. Okay, so that would be $4.49. All right. From this point on, I ran that strategy this way. I reduced the total cost of these calls, trying to get it as cheap as possible. Now the money's starting to come in again. And I ran this thing, just run it. I didn't look at the chart. I didn't perform technical analysis. I didn't get out the indicators. I built my spreads mechanically the same way every time. And if there was a reason to change, I put the notes in there. I paid attention to the overall market, what was going on in the different sectors. Of course I did. And I mainly paid attention to what the hell was going on in my trades. Was I losing? Was I losing a lot? Were the losses coming back to back? If they were, I would scale back. I was getting too aggressive. Scale back. Nothing is 100% all the time. You have to be a little bit flexible. Ran the trades. There was losses, guys, and I'm not going to tell you that you're not going to lose. All right? There were losses. Kind of keep rolling here. I'm keeping my eye out for notes, and along the way there, guys, there were notes, right? You can see, I've had losses, and I've had to adjust. I've had the notes in there. So these two are active right now. They're not closed. Right here, all of these losses in a row. Call loss, call loss, call loss. That's it. That's 3 call losses in a row. No more calls. Shut that down. Also, I had to do something. You can't just get kicked again and again and again and just keep doing it. No, timeout. Something's wrong. And if you guys look at the market right now, this is 9/17/2020. You look at the market right now, you tell me that you understand why I shut that down and quit taking the calls right now. Right? Now, this is an aggressive trade strategy. I didn't go too far out in time. I didn't I didn't go deep in the money or go deep out of the money on the put side. Let's bring this up. So this is where we're at right now, guys, right? And this is why back to back loss, loss, loss. I shut it down, right? The calls were just I'm getting beat up a little bit and you know trying to back the strategy off. I got a little too aggressive, but I took advantage of the market. That sucker was moving, and the trades were winning again and again and again. Scale up and scale in, right? Make some money on these trades. I'm not telling you that going out of the money and being safe and building the spreads using the income strategy. I'm not saying that that's not an effective strategy. I'm not even saying you shouldn't do it. Do it. There's nothing wrong with it. But depending on your account size or what your goals are for your account, those out of the money positions, those really safe credit spreads, you're going to win frequently, but you're not going to win a lot of money. So you're going to have to put a lot of them on if you're going to want that money to pay your bills or to aggressively grow your account, right? And that's what I was trying to demonstrate here. That you don't have to be a market technician or a master trader to be able to make money in this market. It always goes up, okay? And when it doesn't, it's because there was a reason it didn't. There's some negative pressure on the market, and when that pressure fades off, the market goes back up. So if you're trying to trade something like equity stocks, right? I don't know, go to Costco or something. You try that strategy in this, you're going to get destroyed. Look at this thing. It isn't going up. It's going sideways. But this isn't the marketplace. This is one single stock. Okay? So you go into something like QQQ, and you guys, you haven't seen the profit factor on this rolling strategy on the QQQ yet. You go into something like QQQ or SMH or okay, EEM, you're going to get a little bit ran over, but these gaps are murdered, guys. They hurt. It's hard to salvage your trade when this thing goes against you. It's doable, I'm telling you. So I'm sure that every single place out there on the internet is telling you about the credit spread where you go out of the money and you're really safe and you win 99 out of 100 trades. There's nothing wrong with it, but there ain't a lot of money in it. So you better load the boat with as many of those trades as you can get and still be focused on something that looks like this and not something that looks like this. Okay? So if you're going to run mechanical trading strategies, the first thing you're going to want to do is stay away from companies. Go to ETF products. Go to things that look like SMH. Go to things that look like QQQ. All right? When you just grab a hold of things because you like AMD, it's not going to work. Okay? Oh, yeah, all right. Okay, AMD's been kicking butt this year, right? Apple, Tesla, until they don't, right? But be selective. Stay away from Costco and Google and Amazon and Tesla and Netflix. And this strategy isn't designed for that. Can you do it? Yes, of course. You're not going to have the win rate that I have. But that doesn't mean you won't make money on it. This particular strategy is designed just the way that I built it. You've seen the rules. We looked at them on the spreadsheet. You've seen the facts, what it is actually doing. Okay? That number has a little bit of fundamentals in it. I pay attention to what's going on in the market, but that number mainly comes from how many losses I'm taking. If I'm taking too many losses in a row, I dial back the aggression level. If the wins keep coming back to back, I load up. I get aggressive. All right? And the number speaks for itself. Okay, that's the end of the boat right there. The number speaks for itself. Okay? And that's what I'm trying to get through to you guys. It doesn't have to be, you don't have to be the Babe Ruth of trading. You don't have to be the next Warren Buffett. You don't even have to focus on equity products. You can focus on uh, ETFs from the indexes or the sectors or both, and you can be very mechanical. And if you control your emotions and you just take the trade like you're supposed to take it, pay attention to your wins and your losses, and you make subtle adjustments when adjustments are needed, you can do this. Now, I haven't moved the decimal point over yet. That's $12,879 for the year right now. That's the house's money. And now these two trades are open, so I could lose those, and I'm going to be down another $500 or so, right? But I don't know yet. All right. So there you go, guys. This video was designed or made today to introduce the idea of being mechanical. I did not make this video to tell you exactly what my strikes were because I wasn't actually intending to do spreads when I made the strategy. I was just trying to use calls and just prove that you could all the time. The problem is they got too expensive and I couldn't do it. So I had to revert back to my old self and use the spreads to help me pay for the calls. I will look to make a video on the strike selection and the trade management. The trade management is right here. You close your losers at 2/3 loss, or if you get too close to expiration. Okay, that's the lump sum of it right there. And I was using 75, but you've seen in there too many losses in a row. I dialed it back. There was a point in time where I was taking 25% profit. Okay, so things had to adapt. But you got the nuts and bolts right here. As for the specific strikes that I was using uh, every time that I build the trade, I'm going to need another video for that. We're already at we're at 30 minutes into this one, and I'm really trying to keep the videos as short as possible. So I appreciate your time. You want to hear more about this, or if you want to talk more about this, I will be streaming on Fridays, where I always am, in the live trade room, Friday afternoon, 2 o'clock. Come in and talk options and ask some questions. All right? I appreciate your time, and I look forward to seeing you in the chat room.